Tired of missing out on market opportunities? Beyond the Bullseye is here to help you hit your financial goals. Join our expert hosts as they break down the latest mutual fund schemes and stock market trends. We'll guide you through investing, from understanding the basics to navigating those complex market ups and downs.
Hey everyone, and welcome back. Ready to dive into another exciting corner of the market. Today we're talking about small cap mutual funds in India, specifically how they performed in October 2024.
We've got a lot to unpack, so let's jump right in.
It's interesting. When we put out a call for topics, this one kept popping up. It seems like everyone's looking for those hidden gems that could turn into the next big thing.
And they're not wrong to be curious. Small cap funds have been making some serious waves.
Absolutely. But before we get into the nitty-gritty of performance, let's start with the basics. What exactly are small cap mutual funds?
So picture this. A company relatively new to the scene, small, but with huge potential, kind of like that scrappy underdog everyone roots for.
Like it.
In India, we classify these underdogs as companies ranked below 250 with a market capitalization of less than 5,000 crores. Think of them as the innovators, the disruptors, the ones with the potential to become household names.
Okay, so they're the up-and-comers, the ones with that it factor.
Exactly. And a small cap mutual fund basically pools your money with other investors' money to buy into a bunch of these promising companies.
And to be considered a true small cap fund in India, at least 65% of its investments have to be in these smaller companies, right?
You got it. But remember, higher potential reward often comes with higher risk. These smaller companies can be more volatile. They're more susceptible to market swings. It's like riding a roller coaster, thrilling highs and, well, some dips along the way.
Okay, that's the risk part, but let's talk potential rewards. The Nifty Small Cap 250 Index, which tracks these smaller companies, has seen some pretty remarkable growth, hasn't it?
Oh, absolutely. More than 3.5 times its value in just 5 years.
Wow, that's significant growth.
It even hit an all-time high recently. And get this, in 2024 alone, it jumped by a massive 25%.
Wow, 25%. Now, to put that into perspective, how did that compare to the Nifty 50, which tracks the top 50 largest companies?
Well, the Nifty 50 only grew by 12.8% in the same period.
Okay, so a noticeable difference in performance there. But I know you're interested in October 2024 specifically.
That's right, I am.
So let's get into the details of what happened during that month.
Okay, but before we do that, I think it's super important to remember that past performance isn't necessarily indicative of future results.
Absolutely. We always say that.
Just because a fund performed well in October doesn't guarantee it'll continue to do so.
Exactly. We're here to equip you with information, not to make promises or predictions. This is about empowering you to make informed decisions. All right, so let's get down to it. Which funds were leading the pack in October 2024?
Well, topping the charts for that month, we had Motilal Oswal Small Cap coming in strong with a 2.75% return.
Okay, Motilal Oswal taking the gold. Who else was in the running for those top spots?
Right behind them, you had Tata Small Cap with a 0.73% return, followed closely by Union Small Cap at 0.46%, and then HSBC Small Cap at 0.44%.
And rounding out our top five, we have Baroda BNP Paribas Small Cap at 0.20%. Interesting to see those numbers, and I know the article we're looking at mentions returns for 6 months and a year too, but let's stick with October 2024 for now, since that's what you're interested in. So looking at these high performers, what sort of insights do you think we can draw from their success? What might have given them that edge during that particular month?
That's a great question. It's always tricky to pinpoint exactly what drives short-term performance, but one thing that stands out to me is that a lot of these funds had a significant chunk of their investments in sectors that really took off in 2024. Like, for example, you mentioned Motilal Oswal Small Cap earlier. They've got a strong focus on manufacturing and consumer discretionary, both of which saw a real surge toward the end of the year.
So it's not just about picking the right companies, it's about anticipating which sectors are going to be poised for growth too.
Exactly. You've got to be able to see the bigger picture, those broader economic trends to really be successful in the small cap world. But, while we're talking about returns and performance, I think it's important to step back for a second and remember the why. Why would someone even consider small cap funds in the first place?
You're right. We can get so caught up in the numbers that we forget the bigger picture. Besides those potentially eye-popping returns, what are some of the other advantages of dipping your toes into the small cap pool?
Well, one of the biggest advantages is diversification. Think of your investment portfolio like, let's say, a car. You wouldn't want all four tires to be the same size, right? You need that variety, that balance for a smooth ride.
Okay, I like that analogy.
And small cap funds, they can act like those different size tires, adding that balance to your portfolio. So when those larger companies, the big players, hit a bump in the road, your small cap investments might just be what keeps you going.
So it's all about spreading the risk, not putting all your eggs in one basket, even if that basket seems pretty appealing at first glance.
Exactly.
What other benefits did the article highlight?
Well, remember how we talked about small cap funds often focusing on those companies with a huge growth potential?
Yeah, those companies that are like the hidden gems just waiting to be discovered.
Right. It's like getting in on the ground floor of the next Google or Amazon. It's that early investment potential that can really pay off over the long term.
That's where those expert fund managers come in, right?
Yeah.
They're the ones who can spot that potential, those companies that might fly under the radar for us regular investors.
Precisely. They're like those talent scouts in the financial world, using their expertise in research to identify the companies most likely to succeed. They're doing the legwork, sifting through the thousands of possibilities to find the real deal.
It's like they're the venture capitalists of the mutual fund world, placing their bets on the companies they believe in.
A good analogy. But even with the best fund managers in your corner, it's important to remember that there are no guarantees in the market. Small cap investing, it's a marathon, not a sprint.
Definitely a long game, not for those looking for a quick buck.
Exactly. You got to be prepared for some ups and downs along the way. But you know what they say? The higher the risk, the higher the potential reward. And historically speaking, over the long term, small cap companies have actually outperformed their larger counterparts.
It's like that saying, slow and steady wins the race. But sometimes those slow and steady growers, they can surprise you, with a sudden burst of speed, especially when the market starts to recover.
Oh, absolutely. Small cap companies, they tend to be a bit more sensitive to those market cycles. So when things start looking up, when there's a rebound, they've got that agility, that nimbleness to capitalize on those favorable conditions and really shoot off. They're like speedboats, quick to turn, quick to adjust.
So we've got this interesting mix, right? That long-term growth potential, but also that ability to seize those short-term opportunities when they arise. It's like the best of both worlds, in a way. But we've covered a lot of ground here today, talked about the ins and outs of small cap funds, those potential rewards, the risks that come with the territory, and how they can add some valuable diversification to a portfolio. But there's one more thing we need to address before we wrap things up, and that's the tax implications.
Ah, yes, taxes. Can't forget about those. Luckily, when it comes to small cap mutual funds in India, the rules are fairly straightforward.
Okay, good to know. So break it down for us. What do we need to know come tax time?
Well, it all boils down to how long you hold on to those investments. If you sell your units within a year, any profits you make, those are considered short-term capital gains, and those are taxed at a flat rate of 20%. Pretty simple.
Okay, so hold for less than a year, flat 20% on any profits. Makes sense. But what if you're playing the long game, holding on to those investments for a longer period? What happens then?
Ah, now that's where things get even better. If you hold on to those units for more than a year, then you're in the realm of long-term capital gains. And in India, the first 1.25 lakh of long-term capital gains from equity mutual funds, including our small cap friends, those are completely tax exempt.
Tax exempt. That's a pretty sweet deal for those long-term investors.
It is. And anything over that 1.25 lakh threshold, that gets taxed, but at a much lower rate of 12.5%.
So not only do you have the potential to benefit from the growth of these small companies over time, but you also get some nice tax advantages along the way. It's like a win-win for those who have that long-term vision.
Exactly. And speaking of vision, it's a good time to bring this back to you, our listener. We've explored small cap funds from all angles, but the big question is, are they right for you?
That's what it all comes down to, isn't it? Because all this information, it's great, but it's only truly valuable if it helps you make informed decisions about your own investments.
Couldn't agree more.
So just to recap, we learned that small cap mutual funds, they offer that exciting potential for high growth, particularly over the long haul. They can be a great way to diversify your portfolio, spreading out that risk a bit, and they might even outperform those bigger players during market recoveries.
But remember, and I can't stress this enough, they are considered high-risk investments. The value of your investments can fluctuate, especially in the short term, and there's always that chance of losing money. It's important to go in with your eyes wide open.
You've got to find that balance between risk and potential reward. That's where things like doing your research, understanding how much risk you're comfortable with, even talking to a financial advisor if that's your style, those things become so important. Don't just jump into the deep end without knowing how to swim right.
Couldn't have said it better myself.
And one final thought before we sign off today. We've really focused on October 2024 in this deep dive. But the market, it's always moving, always changing. What happens in 1 month, 1 year, it doesn't exist in a vacuum. Those broader economic trends, any unexpected events, especially as we head into the last quarter of 2024 and beyond, those can all have an impact on how these funds perform going forward.
Absolutely. The takeaway here is that this is just the beginning of the journey. Your journey as an investor. Keep learning, stay curious, and make sure your investment decisions align with your goals, your risk tolerance, and your overall financial plan.
And on that note, we'll wrap up this deep dive into small-cap mutual funds in India.
Tune in to Beyond the Bullseye powered by Bullsmart and start investing smarter today.